Have you ever wondered what the stock market is and how it works? Well, the stock market is essentially a giant marketplace, but instead of fruits and vegetables, you'll find shares of companies being bought and sold. It's a bustling hub where companies go to raise funds and where investors go to buy a piece of those companies. That's right, the stock market is like a giant marketplace for companies and investors. Now, you might have heard about NSE and BSE, but what exactly are they? Well, they stand for National Stock Exchange and Bombay Stock Exchange respectively. Essentially, they are platforms where shares of companies are bought and sold. Think of them as bustling marketplaces. The NSE, being the youngest and largest stock exchange in India, boasts of a wide national presence. On the other hand, the BSE, despite being older and having fewer listed companies, is known for its iconic Sensex index. While they serve the same purpose, their operations, listed companies, and indices differ. So, NSE and BSE are the two major stock exchanges where the buying and selling of shares take place in India. But what are these shares that we keep talking about? Well, in the simplest of terms, a share represents a slice of ownership in a company. When you own a share, you essentially hold a piece of that company's pie. The more shares you own, the bigger your piece of the pie. The price of a share isn't set in stone. It can fluctuate, soaring or plunging based on the company's performance. In essence, when you buy a share, you are buying a piece of a company. Did you know there are different types of stocks you can invest in? Let's take a brief look at these. First, we have common stocks, which represent ownership in a company and a claim on a portion of the company's profits or losses. Next, we have preferred stocks. These are a bit different. Holders of preferred stocks are paid dividends before common stockholders and have a higher claim on company assets if the company goes bankrupt. Then, there are growth stocks. These belong to companies that are expected to grow at an above-average rate compared to other companies in the market. Finally, we have value stocks. These are shares in companies that are considered undervalued compared to their intrinsic worth. Each type of stock comes with its own set of characteristics and risk factors. So, we've covered a lot today, haven't we? We delved into the stock market, breaking down its complex workings into simpler terms. We explored NSE and BSE, two major Indian stock exchanges, and discussed shares, the building blocks of the market. We also looked at the different types of stocks you can invest in. It's a lot to take in, but don't worry, we're in this together. Stay tuned for our next video, where we will learn how to invest in shares using a DEMA account. Until then, happy learning.